Well, this financial year end is almost upon us with just over a week left to get your small businesses' affairs in order. Tim Reid, Chief Executive of MYOB, is here to help with some last-minute tips to make sure that you're on top and taking advantage of any tax changes and to set you up for the next financial year.
Hi Tim, thanks for joining us. Now, have there been any changes announced in the recent federal budget that will affect small businesses? And if so, how will they affect them?
There weren't many changes in the budget for small businesses, but there are some things that small businesses do need to be aware of from July 1 forward. The most important is probably the changes in superannuation. So the superannuation rate is rising from 9% to 9.25% for all employees. And the second is that superannuation is now payable for all employees up to 70 years of age. So it's an increase in the age threshold for super. There weren't any changes to taxation on trusts, to company tax rates, to capital gains tax. So there weren't many changes there. Of course, there's the indexation on income taxes. So those tax brackets will all change slightly as well.
And what about any loopholes that might be closing before the end of the year that small businesses need to be aware of?
There are a few things that small businesses should be aware of and perhaps have a conversation with their accountant about. There were some changes in what's called the thin cap laws. Now, they generally apply to large multinational corporations, and they were generally tightened. But one thing that did happen is the threshold at which they cut in was increased from $250,000 up to $2 million. And that might mean, particularly for some medium-sized businesses who do have some debt on their balance sheet, there might be some advantages for them in terms of tax planning. The other big change was really for the construction industry. This wasn't announced in the budget, it was announced in last year's budget, but it becomes applicable on July 21, so just around the corner. And that is that anyone in the construction industry needs to start to report to the government any payments that they make to subcontractors. And that kicks in for the first time in July this year. So anyone in the construction industry needs to be very aware of that.
And have you got any tips for small businesses around tax minimisation strategies for this financial year or looking ahead to next financial year?
Yeah, absolutely. Look, business owners should all be aware and proactively plan their taxes. And there are a few things that they should be thinking of before June 30. Through the course of this current government, they've increased the amount of an asset write-off, so the immediate amount a business can expense if they purchase an asset, from $1,500 to $6,500. Now, no business owner should go and buy assets just because of the tax changes, but for anyone who's thinking of investing in their business, if they make that investment this side of June 30, they can get the tax benefit immediately. If they make it the other side of July 1, they've got to wait a whole nother 12 months before that. And because that has increased from $1,500 for an asset up to $6,500, it's a more meaningful deduction that business owners should be thinking of. My only other advice would be just make sure you're up to date on all of your bookkeeping, that you do understand where the financial position of your business is going into financial year end, because that will also impact whatever tax strategies you and your accountant might put into place.
So is that organisation the most crucial thing looking ahead to next financial year?
It is. Look, business owners are always in a much stronger position if they've got up-to-date financial information and if they're organised and structured that way. And it's not as hard as it used to be. There are lots of tools that MYOB and other businesses like us out there have been bringing to market to make that an easier and easier task. I would particularly draw anyone's attention, if they're not using it already, to products that allow you to get your bank feeds to automatically come into your product, because that automates bank reconciliation, and that's the biggest nightmare at financial year end, is generally going through your accounts and your bank statements and making sure the two of them match. With our MYOB Live products, for example, that's been automated. So it's worth business owners looking at those types of solutions just to make the end of financial year a little less burdensome than it generally is.
Some really great information there, Tim. Thanks for your time.